Hi guys, today we're going to be learning about FOPs and the circular flow of income. Let's start off with FOPs. There are four main FOPs that one can provide. The first one is land. Land is, we all know, just a sector of agriculture or something that can be built on a building or something. We have labor, that's the second one, capital being the third one, and enterprise being the fourth one. Now, from each of these FOPs that one can provide, they can receive a reward from those FOPs. So for land, the equivalent reward is rent. If you rent land to someone, you can earn money from that, and then that money can be used in the economy somewhere. From labor, if you work at some place, so if you work for a company as an employee, you get a salary in return, and that salary can then be used in the economy. Capital. So for capital, let's say that you open a savings account in a bank and then you put that money in savings. You put the capital in savings. The bank will give you an interest on that. So then that is the reward you can get from the capital you invest, right? And then from enterprise, which is the fourth one, say enterprise is linked to the word entrepreneurship. So if you have a business or you own an enterprise, then you can earn profits from the business. And those profits can be reinvested in the business, or they can be used for personal requirements. There's another important distinction we need to make in economics, and that is between these two, microeconomic and macroeconomics. So microeconomics mainly focuses on individuals, households, specific government sectors, or just anything specific in general, whereas macroeconomic focuses on the economy as a whole. So any variables that are affected in the economy, we only look at the effect on individuals. However, any variables that we include in macroeconomics, we look at the effect on the whole economy. And that is a distinction we have to make going forward. So, if you look at the circular flow of income, which is quite an important theory and it's quite large as well. If you look at this model, we can see that there are two main parties, households and firms. So, households can provide FOPs to the firms. These FOPs, as we know, are land, being the first one, labor, capital, or enterprise. Now, from these FOPs can be reinvested by the business into producing more goods, and hence we have the second part of this model being as goods and services, because from the FOPs that households provide, firms can make goods and services, right? But then for the FOPs that households provide to their firms have to factor in the incomes that they have to pay for these FOPs back to the households, right? So that's if you're basically working at the company, you get a salary from the company for providing labor, basically, right? And then lastly, once you earn that money, households can then spend it in the economy, which is called consumer expenditure. That's the fourth part. So in consumer expenditure, you can spend your money on essentially anything in the economy to buy goods, the daily survival needs, or whatever wants you want to fulfill. And those are the four main parts of the circular flow of income. Now, when looking at microeconomics itself, we mainly need to focus on firms and households and the relationship in general, just microeconomics. So only knowing what FOPs, what goods and services are, what factor incomes are, and what consumer expenditure is in general, in relation to households and firms is enough for microeconomics. However, for macroeconomics, it is important to look at how factor incomes and consumer expenditure can affect the economy as a whole. And that there's a different concept called injections and leakages, which helps keep the wheels of the economy running, which we will be looking at in the next video. Stay tuned for that.